Hello, and thank you for giving us the opportunity to present in front of you today. We are Logix Consultancy, and in this presentation, we will focus on identifying potential risk and proposing control measures for green leaf tissue. Our expert team will be guiding you through the following key section. The first section will be the introduction, and this will be presented by myself, Amar Shawa. The second section will be executive summary and company overview, and that will be covered by Inisa Osaf. Third will be the identification of three key risks, and that will be presented by Mohammed Al Husseini. The fourth is the implementation plan, financial risk overview and analysis, and this will be covered and presented by Mariana Shabazz. The fifth and the last one is the proposed solutions and conclusions, and that will be presented by our colleague Etoya Onopo. Thank you once again for your attention, and I will now pass it over to my colleague Enis to begin with the executive summary and introductions of the company. Thank you very much.
Hello, everyone. So this is the executive summary on the Logix consultancy. That is the consultancy that has been selected or awarded to help Greenleaf in the mitigation of their identified risks. So this company, as we can see, has been in existence for about 2 decades, and it has helped many companies in solving their identified risks, while their focus is on operational efficiency, legal compliance, and financial stability. They also look at making sure that they give solutions that will help businesses with the enhancement of a long-term growth and sustainability in their business. Whilst we go ahead, we see that Greenleaf, that has awarded this company with this consultancy work, is actually a small business entrepreneurship that is into importation of duplex tissue papers from international suppliers, and is distributed to local businesses and retailers in Ontario. And they have identified 3 legal risks, as we can see here, with the compliance with employment laws, the borrowing money from banks, and then constructual business, constructual disputes with suppliers. Now, these will be explained further as we move on in this presentation. Now, here we have a team of professionals that has been assigned to help give the specific needs of Greenleaf tissue. As we can see here, all the names have been listed with their respective responsibilities.
For the legal risks for green leaf tissue, I will talk about 3 legal risks green leaf tissue should be aware of. Here, risk 1, employment compliance. Green leaf must follow Ontario's Employment Standard Act, which covers pay, hours, and working conditions. For risk 2, business loans. Loans help us grow, but they can be risky. Some loans have strict rules or require personal guarantees. If sales drop, it can be hard to pay them. Risk 3, supplier contracts. We rely on suppliers, so clear contracts are important. If there are delays or product issues, it could hurt our business. In summary, Greenleaf should stay compliant, manage money wisely, and keep supplier relations strong to avoid legal risks and grow safely.
Thanks, Mohammed. I will continue with financial risk overview, analysis, and implementation plan. We highlighted key financial risks, which are credit risk, liquidity risk, loan obligations. Industry context, small businesses size and reliance on import raise lender concern. Market competition squeezes margin despite growth in eco-friendly tissue sector. For evaluation and analysis, we can see the credit risk is loan repayment affected by client delay and economic trends. Variable interest rates can strain cash reserves. Liquidity risk, delayed sales cycle impacts supplier and loan payments. Owner may be personally liable if cash is insufficient. Loan and repayment concerns, short-term loans till from 3.6 to 10% interest 1-3 years. Long-term loan 4 to 7% interest from 5 to 10 years. Employment terms is 30 to 90 days, can misalign with sales cycle. And lending risk profile is moderate to high risk due to small asset base and unstable revenues. Mitigation strategies is credit checks, diversify revenue, negotiate fixed rate loans, and liquidity improvements can be cash flow forecast, emergency fund, flexible credit lines, renegotiate, consolidate debt, and maybe credit story enhancement, government-backed loans, or detailed financial report. And here is our implementation plan matrix. We just color it, and we can recognize the red is high priority, immediate action, yellow is monitoring, caution, green is ongoing processes, regular update is blue color, and orange is improvement initiative. Thank you. I will give the voice to another speaker.
Hi everyone, my name is Itoya Onabo. I am here to do a presentation for Group 1. I will be talking about risk management for Greenleaf Tissue Inc. This is a small company in Ontario that imports and sell eco-friendly tissue paper. Let's look at the risk they face and how it can be managed. Employment regulation risk. Greenleaf must follow Ontario Employment Standard Act, especially for overtime and pay. If they don't, they could face fine, legal issue, and unhappy employee. This could hurt the company reputation. Solution: to prevent this, Greenleaf would update its employee handbook every year, train staff on HR policy, and do regular audits. This will help to avoid legal troubles and create fair working place. Borrow from the bank. Greenleaf use bank loan to grow, but missing payment is a big risk. If they default, they could lose access or even face business failures. Solution for this: to avoid this, Greenleaf will check customer credits before making deals, keep extra cash for emergency, and apply for government-backed loan. Monthly financial plans would also help to prevent money problems. Supplier conflict. Sometimes supplier might deliver late or send low quality product. This delays Greenleaf business and causes operational issues. Solution: they would have to clear contracts, communicate regularly with the suppliers, and always have backup options. Quarterly review would help to keep things running smoothly. Risk matrix and comprehensive risk control. Greenleaf use a risk matrix to understand which risks are most serious. They also take a big picture approach for reviewing all risks together. In conclusion, by following this strategy, Greenleaf can avoid risk, follow the law, stay financially stable, and keep operations running smoothly. Thank you for listening.